Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Carroll, Massar and Tim Stenovec on Bloomberg Radio.
We're going to stay with the theme of presidents
We
next.
are, because who is in the White House, right? Sitting in the Oval Office, the Congress they get to work with. But that individual is determining policies, right, that are going to affect businesses in the United States, around the globe. They're going to impact certainly what we have in our wallets, whether or not we feel like the economy is better. And so we kind of started to think about, right, wanting to understand the individual who's in the White House, president, their own ability, right, to manage their own money.
Yeah.
What that might tell us maybe about them as individuals and what it means for policies.
So to discuss that, let's head back to the Bloomberg Interactive Brokers studio in New York City. We've got Megan Gorman with us, founding partner of the independent wealth advisory firm based in San Francisco, Checkers Financial Management. She's a tax attorney. We want to talk to her about her book, All the President's Money, How the Men Who Governed America Governed Their Money. Megan, great to have you with us. Thanks so much for making the time.
Thanks for having me on,
What inspired you
Stephen
to
Carroll.
write this book? Because I wonder what the relationship is between, personal finances and mega finances when you're running a country. What inspired you?
Yeah, so first of all, I've always loved history, like a lot of Americans. And I think it's always interesting to understand where the presidents are a lot like us, where they have their humanity. And money is emotion, and this is a great way to look at presidents across American history in terms of how they feel about money, how they interacted with money, and what were their money values. Now, we are in an election year, so obviously, the spotlight goes to both Donald Trump and Kamala Harris to figure out, do their personal finances impact their policies? And I'd have to tell you, it's not that it impacts their policies directly, right? Fiscal policy is thousands of people working on it. But what I would tell you is it's a lot about sometimes a reflection of things that are important to them. So, for instance, with Trump and the Tax Cuts and Jobs Act, he increased the unified credit, the amount we can pass free of tax at our death, to now in this year it's 13.6 million. Very much a reflection of his values of generational wealth transfer. In contrast, when we carve into the current tax proposals by Kamala Harris, very much a focus on the middle class. And she's been very clear to all of us that she comes from a middle class background. So there's some correlation there that we can definitely see.
What surprised you in doing this process? And I'm curious, did you go through all the presidents, or how did you pick and choose?
Yeah, I tried to. I got about 34 in the book, because the book sort of looks at the traits I see in my high net worth clients, right? And then tell you stories. So what I found really surprising is how quirky some of the presidents were. So I found letters that LBJ wrote that basically said, I was up at 2 a.m. in the morning, worried about money. And then in the next sentence, he starts talking about buying a suit that would be like somebody today buying a $4,000 suit. Things like, FDR forgetting to file his income tax returns because he lost the paperwork somewhere between Warm Springs and his house in New York. So really fun little things that made the presidents feel much more like we are today.
I love that you point out in the book the two questions that everyone asked you when you told them that you were writing it. Who was the best with money and who was the worst?
Exactly.
Let's start with who was the best.
Okay, so, the best people always means is that the richest, right? And I think the thing is, wealth has a lot of connotations. So don't laugh, but I would tell you the best with money was probably Herbert Hoover. Grew up an orphan in Iowa, makes his way, and learns how to budget as a child in order to get access to funds to have clothing and food and medicine. Gets to Stanford, goes to Stanford basically tuition free because he was in the first class at Stanford University. And then he takes his geology degree, and through the use of grit and his budgeting, he ends up discovering gold mines in Australia. And so it's really important to note that as incredibly wealthy as he became, he was very, very charitable over the course of his life. I think the other president that we would call sort of the best with money is George Washington. And, over the course of his life, he built immense wealth through, acquiring land and by doing something that a lot of other presidents did to make money, by marrying up. Martha Washington had a lot more money than George, and so it helped him with his net worth by marrying her. So I think the thing about both of them is they both worked really hard, really utilized the skills that they had to build wealth. The one caveat is, and we always have to keep this in mind, is Washington was a slaveholder. When it comes to the worst, I'll tell you, Thomas Jefferson, do not take money advice from him. He was incredibly illiquid, not good at budgeting, really just focused on living a fabulous life. I mean, you wanted to go to his dinner parties, but you did not want to be there when the bills came. And so he lived this very big life, didn't have the money. And I'll tell you, at the end of his life, the last letter he writes is this beautiful treatise on democracy. The second to last letter he writes in his life is to try to buy wine on credit because he just didn't have the money to pay for it. And so that's why Thomas Jefferson just struggled so much with managing his money. So be a Washington, not a Jefferson.
I think people might be surprised too that Abraham Lincoln was one of the wealthiest presidents of his era. Yeah. Walk us through that.
Yeah, so Lincoln grew up poor, made a ton of mistakes growing up, right? Would start businesses, they fail. But he finally gets to the point where he studies, he becomes a lawyer, and he does what Washington did. He married up. So Mary Todd was a wealthier woman than he was. So between his law career and Mary Todd's family, he does incredibly well. And when you go to Springfield, Illinois, what's striking is he has the best house in town. But Lincoln really made money when he became president because he rented out his house in Springfield, and every paycheck he would save half of it and put it into treasury bonds and treasury notes that were paying 6% and 7% to finance the war. And so by the time he passed away, he had a net worth of $85,000. Doesn't sound like much to us today, but really it's about $2 million in today's money. But again, Lincoln's one of those ones, he did make some mistakes, died without an estate plan, and the family had to have the Chief Justice of the United States come in and administer the estate. So did some good stuff, but struggled with some other issues.
I want to bring us right back up to the present, though. We're waiting to hear from Joe Biden in the next few minutes here at the Bloomberg Global Business Forum at the Plaza Hotel in New York City. Megan, talk us through, I really enjoyed the story that you told in the book about Joe Biden and house hunting. Tell us about Joe Biden's relationship with property.
Yeah, well, first of all, we have to remember with Joe Biden, this is a guy who grew up with not a lot of money and early in his life had a very traumatic moment with his wife passing away. And so as a result, when you deal with trauma, you want to be sort of slowing down your thinking. But Joe Biden loves real estate, right? We all know he has the house in Rehoboth, but he fell in love with this very big house in Wilmington, Delaware. And it was a house that he should never have bought on a senator's salary. And it was an old DuPont estate, was falling apart, and he was able to buy the house, but he didn't have the cash flow to keep it up. So he would do crazy things like sell off pieces of the land or only fix up certain parts. And so this house was sort of like an episode of The Money Pit. And it was something he really, really loved because he loved this idea of what the house represented, but he really just didn't have the liquidity. And I think this is something that's relatable to all Americans, right? We all struggle at times to have assets that we might not have the liquidity to manage. So Biden is not someone you really want to emulate. You want to look at him and go, gosh, really think through how you make financial decisions and what will happen 5, 10, 15 years from now based on that decision.
All right, well, we're staying with kind of current presidents or recent presidents. How about the Clintons? Take us to Bill and Hillary.
Yeah, Bill and Hillary Clinton, incredibly smart people, but early on in their lives, they had an opportunity to invest in something called Whitewater. And anybody over the age of 40 remembers Whitewater, right? So, but Whitewater started out pretty innocently. If I showed you a picture of Whitewater, it was pitched to them to be a retirement community that people would be able to build houses on. And it was beautiful. And when they were pitched this investment, they made a mistake that most people do because they're afraid of looking foolish. They didn't do due diligence. They didn't ask a lot of questions. And they basically got themselves into an investment where really, if you had dug into it, you would have realized this was also going to be a bit of a money pit, and you were going to have to keep adding money in because there was no septic, there was no electricity on this land. And so the Clintons made a series of mistakes with this. Now, what's nice is we still get their up till 2016, we could still see their financial disclosures. I think one of the nice things to say about them today is they've really become quite organized with their finances. You definitely see estate planning in place. There's a irrevocable life insurance trust on Bill Clinton. They tend to invest in index funds. So they eventually learn their lesson. But the takeaway with the Clintons is, really do due diligence. Ask a lot of questions about your investments before you put your money to work.
What did you learn from researching Donald Trump's finances?
That could be a whole book all itself. Look, I think the thing about Donald Trump is you're dealing with generational wealth transfer, right? He's generation 2. He inherited $400 million from generation 1. His goal is really to get the money down to generation 4 and 5. So when you have someone with that mindset and you have someone who is willing to take risk and really push the envelope, what you get is a lot of estate planning techniques that are technically correct. That the technique itself is something a lot of high net worth Americans use, but he takes it to such an extreme level that that's where you start to have challenges. I would also say with Donald Trump, he also reminds me of another New Yorker who was incredibly aggressive with real estate, and that was Martin Van Buren. And so Martin Van Buren was also someone who became an attorney, very poor background, becomes an attorney, and starts to learn how to navigate the real estate market so he can aggressively buy land from people. So I would tell you, Trump is someone you just have to watch because of the risk and the fact that they're willing to push the envelope.
I'm still up thinking about the role of women and the dowries and the importance in helping out some of these presidents. Our thanks to Megan Gorman. She's founding partner of the independent wealth advisory firm in San Francisco, Checkers Financial Management. Her book, All the President's Money, How the Men Who Governed America Governed Their Money.
But we wanted to take a moment to talk about a different global challenge that we're thinking about as well, and this is on the health front.
Yeah, absolutely. When it comes to chronic disease, which is definitely increasing, we're seeing that in terms of our aging population. And when we think about this event, you think about economic costs, and health is certainly a big one. So back with us with some perspective on that is Elizabeth Stottinger, managing board member for the $60 billion market cap medical technology company. We're talking about Siemens Healthineers. She joins us. She is back in our Bloomberg Interactive Brokers studio. Elizabeth, good to be talking with you again. So here we are talking about costs to the global economy, specifically chronic disease. Give us a little bit of context around that.
Chronic diseases are on the rise, and whether we like it or not, 3 out of 5 people eventually die of chronic diseases, and you can think of diseases like cardiovascular disease, so heart attack, stroke, cancer, or diabetes. So as we're fortunate to grow older and older as the society kind of progresses. There is some bad news which comes with the chronic disease, but fortunately there is also a lot of good news around the topic.
Elizabeth, this is interesting as well because, of course, so many countries are also facing an aging population and the pressures that's going to put on health systems as well. I mean, how prepared are health systems in major developed economies to be able to handle this sort of evolution of chronic disease?
I mean, we've been fortunate to see a lot of positive development over the past years. Just to give you a number, if you look at survival from people who suffer from cancer, this actually has improved by 33% since 1991. And there is a lot of opportunities now to catch things early, diagnose them early, and AI will also come to help us manage these diseases even better looking into the future.
You know, and I want to talk a little bit more about artificial intelligence, which I feel like on one hand is the cure-all. It feels like that many tout to so much. Having said that, when it comes to healthcare, I feel like the GLP-1 new class of diet drugs has really been put out there as potentially already disrupting healthcare and the outlook for people when it comes to various diseases. How does that factor in, and how important is the accessibility of those types of drugs to the world at large into improving the health outlook?
I think drugs like GLP-1 target the topic of obesity so that you just can address the risk of being overweight, which ultimately helps you improve in many dimensions when you look at your health, be it blood pressure, be it your risk to suffer from diabetes. So the availability of such a drug to the wider population definitely is very meaningful. At the same time, it's also not the solution. I think we will have to continue to focus on making sure we live healthy lives and that we focus on catching disease as early as we can so that we have all the choices of managing it in a good way.
When we're looking at how technological solutions can help us to both manage chronic diseases, but also, as you've been outlining, some of the things that, when we used to think about how heart problems were fatal for so many people, and that's something that's really evolved over time with the help of science and technology. Where is the investment needed? Which areas of research are kind of most fruitful for a company like yours to be involved in when it comes to addressing some of the issues these illnesses present?
Right, so we continue to invest continuously, and we're always looking for ways of making a diagnosis earlier, making the experience of the patient smoother, but also ensuring that we can be very specific so that we pick up the way disease which is very unique to a patient, and that we can help guide treatment which then directs exactly to what you need and what will be most effective for you as an individual, and not do a one-size-fits-all type of approach.
Elizabeth, I do wonder about, the customization of healthcare, something we've been talking about for years, how AI maybe finally makes that happen. I know cancer people say, it's not the same. Obviously, every cancer case is different for people, even if it's, the same type of cancer, right? And so treatments really need to be customized, personalized. How does AI get us there?
Well, AI provides this amazing opportunity of being able to really process and bring different data points together in new ways, and then make the recommendations and the insights very specific to you as an individual. And as the whole application of AI progresses, there will be more and more pieces of information we can bring together to then be very mindful and specific about which treatment may help you best. And maybe even you can think of or imagine that you create a digital twin of you as a patient, where you can even potentially test treatments before you actually bring it to the real patient.
But what's the cost of all this to health systems, to patients as well? I mean, this is going to be a factor, as we know budgets are squeezed in so many parts of the world. When you're looking at new technologies that could be implemented, how much of a factor is cost? And is there investment there from the healthcare provider's point of view?
I think if you look especially at this last aspect we just spoke about, which is around making treatment personalized, it might be worthwhile to spend a bit of more money on making sure you pick the right treatment for you as a patient, over trying a one-size-fits-all, and then you may have a lot of kind of inaccuracies, and you may not benefit as much and get better as quickly as you could have based on personalized diseases. So I think there may be a real business case also in making treatments more individualized and really targeted towards you as the person you are.
And I am curious, just 30 seconds left here, Elizabeth. We're talking about the global economy, we're talking about developing economy, we're talking about developed economy. But in the developing world and chronic disease, how do we make sure that we reach those people as well? And just got about 30 seconds here, just quickly.
So you're totally right that also in the low and middle income countries, these types of diseases like heart attack or stroke or cancer are on the rise. And here I believe one of the focus areas which can make a huge difference is try to implement mechanisms and look for ways of diagnosing the disease early. In these countries today, in many cases, we have a situation that cancer is caught very late, and when you catch cancer very late, treating it can be very expensive. So pulling forward kind of the moment where you know that you're in trouble can make a huge difference.
Got it. Elizabeth, thank you so much. Always appreciate it. Elizabeth Staudinger of Siemens Healthineers. This is Bloomberg. right now we're going to dig a little bit deeper into what's going on in Latin America and the Caribbean economies.
Yeah, because we're here at the Global Business Forum, Bloomberg's Global Business Forum, talking about some of those big economic challenges facing the world. So we wanted to focus on one particular region, in fact, and we've got Jordan Schwartz with us, Executive Vice President of the Inter-American Development Bank. You're based in Washington, D.C., an international development finance institution, serving a whole range of countries across Latin America and the Caribbean. So we want to mine into your expertise. Thank you for being with us.
Welcome.
Thank you, Carroll.
We're trying to paint a picture here of where different parts of the global economy are doing. We're very focused on central banks and the moves they've making. You know, the Fed affects everyone in the world, as we keep telling ourselves as well. Where are the economies that you're focused on now in terms of a post-COVID recovery? What's the outlook? What is 2024 looking like for them?
It's a great set of questions. The Latin American Caribbean region is very heterogeneous. Not surprising, right? We have the Caribbean islands, relatively small economies, generally single commodity dependent. In this case, the commodities often are tourism, if you will. And we have big complex economies like Mexico, Brazil, Colombia, Argentina. So it's a heterogeneous region, but it's a region that has been, I think, struggling to maintain and to increase its level of economic growth, of GDP growth over the years, to provide the kind of opportunities and services that the population has grown to expect. It's a middle-income region overall, but it still has vulnerability, important vulnerability. It has a few low-income countries, Haiti, for example, Honduras, and others, but it's generally a middle-income country. And I would say a theme of the day for us, a theme of the multilaterals that work in the region, particularly the Inter-American Development Bank, intermediating on the capital markets, trying to bring long-term financing for development, both public and private, into the region, is how to help the region take advantage of its comparative advantages, to leverage its comparative advantages. Its food production, for example, the region already produces probably 3 times as much as the food that it consumes itself. It produces energy. It has a very green matrix. It has a large hydro base. It has geothermal. It has all kinds of renewable resources. It can be part of the solution to the global energy transition, part of the solution to global food security, and to be able to see investment into those areas and the growth of those areas, I think, will be part of helping the region return to a higher level of growth in the years ahead.
Jordan, what holds it back then? Is it the case that over the years, over the decades, because I feel like we've been talking about, let's take Latin America in particular, or even a nation like Haiti, gets caught in the policies of other countries. What is it that holds it back?
I would say...
and I hate to lump them all in one basket.
Yeah, that's a negative question. I have to find a way to make this positive.
No, I'm not trying to be negative. I'm trying to be smarter. How do we find a smarter way forward?
I think part of it is regional integration. So the economies of scale and scope that come with greater interregional trade, with the trade of energy, with the trade of goods, so that you can tease out the productivity, the competitive potential of the economies. It has overall been a region that has been somewhat atomized and hasn't brought together its own trading systems. That's probably part of it. I would say it's a vulnerable region. It's vulnerable to climate, to weather effects in general, particularly the Caribbean, Central America, but also increasingly, as we know, those commodity exporting countries that are suffering from drought, suffering from flooding, often suffering from flood and drought, increasingly at the same time in large weather events. So it's a vulnerable region. It has more to do in terms of bringing itself together. And I think probably there's a whole theme we could get into if we had another 6 minutes sometime to talk about competitiveness and the way in which the economies could encourage greater competitiveness or productivity.
We're very focused on climate here today. Obviously, we had the Earthshot Innovation Summit earlier on, the Global Business Forum happening as we speak. When you're looking at projects to support across the various countries that you work with, climate resilience, what are you looking at? What sort of projects are you involved in? Where are you seeing success?
It's a brilliant question. Listen, for us, we look sort of at 2 sets of challenges at the same time. One is the box, the asset, the investment. What can be done in order to better manage the risk associated with investment? What role can the financial intermediaries, the multilateral development banks, with long-term finance, with guarantees, with our own sort of toolbox for investment, what more can we do in that space? But then we also look at the systems and the utilities, the policies, the pricing, the quality of regulation, the ability of the utilities to offtake that investment, what needs to be done in order to make prices more self-sustaining, the financial sustainability of the utilities, the capacity of the transmission systems to offtake, to absorb all of this energy that's coming, and to deal with the intermittency of renewables. We are both a policy institution and an investment institution, and we're helping our client countries when we're dealing with both things at the same time, what goes into that investment and the environment in which the investment is being made.
Do you have all the financial instruments that you would like to be able to tackle some of the issues, especially when they're cross-border issues and you're dealing maybe with a couple different countries?
It's the cross-border issues oftentimes are not solely financial. It's about the integrity of contracts, about regulatory integrity, and the ability to trust and maintain the purchase back and forth or the trade back and forth of energy, as an example. The question about financial instruments is really interesting to me because we have been focused on financial innovation even as we are trying to assure the impact of the investments that we make, right? Because there's sort of two things. There's the instrumentalization. Mm-hmm. How do I spread out risk and manage risk better? What are the tools that I can use to do that? When do I deploy credit enhancements, guarantees, strengthening of offtake agreements, termination payments for power? But at the same time, what do I need to do to protect the consumer? What do I need to do to protect the natural capital, the in the environment of the investments? What role does multilateral have to make sure that whatever money we've mobilized can actually be paid back over time?
Right.
It's actually driving economic growth, the capacity of consumers and taxpayers to pay back all that finance.
And to encourage more future investment.
And to encourage more. I think that's an important point.
How much are you working with private investors to crowdfunding for projects as well? I'm wondering if we can gauge investor appetite in some of the projects that you've been supporting.
The IDB has a private sector wing called the IDB Invest, and it has an early equity and venture capital branch called IDB Lab. IDB Invest, which is we're the only multilateral with that kind of risk appetite, derived from an early investment wing. On the IDB Invest side, it is recently been recapitalized, which means that the governments that contribute to it from Latin America, the United States, Japan, Europe, have agreed to functionally double the size of the capital available in this world in which the whole concept of multilateralism is sort of being challenged.
Yeah.
We see a recognition that actually the private sector's got to be a major part of. So we have this vehicle, we have this institution, it's going to be doubling in size, and the balance of the IDB group is basically going to change so that it will be even slightly more than half private finance and the public sector side, the sovereign guaranteed side, growing as well.
I wonder as well in the MDB space, competition, right? You have the Asian Infrastructure and Investment Bank, among others, who are also looking to invest in the same region as you as well. Is it a competitive environment? Are you all competing to kind of fund the same sort of projects?
It's interesting. We've seen this year a concerted effort and a lot of pressure from our own shareholders to bring the multilateral development banks closer together, to function as more as a group, as a unit, come up with platforms for investment. We're not competitive the way commercial banks need to compete with each other.
But can you work together? Do you have shared goals?
Finance, a large part of our financing is co-finance, particularly with the World Bank, which is very active in Latin America and the Caribbean, has sort of a similar set of protocols around environmental and social safeguards, transparency, procurement, competition, and the focus on rule of law. It's a somewhat similar culture, though we are unique in that 50.01% are owned by the borrowing countries, Latin America and the Caribbean. The United States has 30% ownership. This is how, in the Eisenhower administration, this institution was designed with this unique balance. And so we bring that to the table when we bring in other multilateral development banks, and of course presence in every country. We're very decentralized, very client-focused institution. You
talk about, certainly the global country involvement and the collaboration, if you will, geopolitics or upcoming elections we see them all around the world, but certainly here in the United States as well, with someone who's very involved. How does that complicate what you guys are doing?
It's really interesting. We see ourselves not as a government, but as a stabilizing force, right? So when we're engaged, we're talking about the energy sector, but the same is true for the social sectors, for health, education. We spend decades working with these countries to develop their social protection systems, right? Their health and education systems, their power systems, and we bridge governments. Even when there's dramatic change in policies, we tend to help smooth the volatility of policy over time. That should be a function of a multilateral. We're there as partners for the growth. And even though the governments are our intermediaries, it's really the people of the country, it's the consumers and the taxpayers that we work for. And so I think we're used to seeing changes in political parties. We're meant to survive through those changes. And so hopefully we'll play that role going forward, Carroll.
Can I ask you briefly about the US election and what risk that could present, given that the US is such a big contributor to your funding?
I just have about 20 seconds.
No, it's a question. I mean, we get on with our business, and we know and trust that consecutive administrations, as has happened in the past, support what we do and understand roughly what we do, and we hope to work with whoever comes in.
Jordan Schwartz, thank you so much. Executive VP, Inter-American Development Bank. Thank you so much for joining us here.
Pleasure.
Pleasure is ours. This is Bloomberg.